What is happening, everybody? It's your boy, Sean McLaughlin at Options Sean on Twitter. Hope you're doing well. I got to put this whole thing on mute here. There we go. Today is May 9th, 2024. This is the All-Star Options Jam session where we review any action that has taken place in some of our open positions, any positions we stopped out of, any positions we took profits in, positions that we may have made some adjustments to. We kind of have all of the above to discuss this week. We also review some updated stops on some positions that are going our way. And we'll touch on some of the new trades we've put on since we last spoke last week. Well, before I jump into all that, I have to drop the old disclaimer here that everything I discuss is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that that you learn a little bit about my process and hope you take some of that into your day-to-day interactions with the market. All right. So let's jump to some charts here. Let's start at the top. Let's look at the S&P 500. I'm beginning to feel that this low that we put in, what's the date is that? That's April 19th. As we get more and more distance from that low is starting to feel more and more to me like that is the low for that most recent move. And the way the S&P is setting up right here, if I even bring up a chart of the Qs, which is the NASDAQ ETF, it feels to me like we are ready to spring out of this formation and attack the recent highs and maybe make a new all-time high, both in NASDAQ and S&P. That's my feeling here. I feel like the worst is behind us. The meat of options or earnings season is we're through the midpoint, I believe. The market has kind of absorbed everything it needs to absorb. The path of least resistance is beginning to feel higher to me. Could I be wrong? Absolutely. I've been wrong many times before. But VIX just kind of confirms that picture here. Here's VIX at the lowest levels since March, and basically getting into the levels that were the lowest levels of the end of last year. To me, that's pretty bullish, right? There's less and less fear in the marketplace right now. When there's less fear, people are complacent. All the dollar cost averagers just keep pumping money into their 401ks and pension funds and Roths and all those retirement things. And that money just keeps finding its way into the stock market, pushing prices higher. So that's my feel. I could be wrong. I've been wrong before. I'll be wrong again. But that's the big picture we're at right now. So let's jump into three positions that we've taken action on since we last spoke last week. We'll start with the bad news. We'll start with the mildly bad news here. This is a ticker NXE, NextGen Energy. This was kind of a boring trade. Not much to talk about here. We got into the May 10 calls back on November 17th or November 20th. We bought them for 35 cents. This is a trend that just slowly ground our way. So you would think that this trend would have worked out for us. Unfortunately, it did not work out fast enough. That's the thing about options, right? You can get the direction right on an options trade, but there's also the timing component, right? You have to get the timing right. And in this case, NextGen just didn't move far enough or fast enough for us to make any money. These were May 10 calls. So our calls never even made it, or the stock never even made it to our strike price, unfortunately. But the good news is, if you can call it good news, is once we got into May 1st, which is the expiration month for these calls, there were 0 bid and 5 cents offered on those calls. I put a resting order to sell those calls at 5 cents, not thinking I would actually get them. But I did. I got hit on my 5 cent offer. So to me, that feels like free money. Got out for 5 cents, paid 35 for them, got out for 5. Almost a full loss, but hey, not a total loss. And as always, with long call trade positions, when I size these trades, when I put them on fully accepting the fact that there's a good chance I can lose 100% of my investment. And in this case, we got pretty close. But yeah, we're out of NextGen. It's a bummer, but didn't work out. The other piece of bad news here is Apple. We were in a short iron condor that we got into back on April 10th. My bet, my feeling on this stock when we got into it was that I felt that both the bears and the bulls had overplayed their hands. Actually, no, let me say that again. I felt that the bears had overplayed their hand when we were right here. in early April. I felt that, this move down in Apple felt a little exhausted. It felt like that was a little overblown for Apple. But I also thought that anyone who was buying the dip here, the bulls, the Apple fanboys, whatever you want to call them, whoever was buying the dip here was also going to be disappointed as well. And it looked like I was right for the first few weeks. I mean, it looks like this is nothing but chop fest, nothing but frustration. We had an earnings event here on May 3rd, which I thought would be a little bit muted. Turned out the market liked it a little bit more than I thought it would. Stock traded up above 180. That was our stop loss level. Any close below 180 was our signal to get out. So we pulled the trigger. But all things considered, the loss wasn't that bad. We collected 255 the day we got in. We paid 450 on the way out. So we lost a little less than $2 on the trade. Not terrible. The max risk we had in this trade was about 750. We could have lost as much as 750. We only lost $2. Not bad. I'll take those kind of losses all day long. All right, that's it for the bad news. The good news is C Limited. This is a trade that me and Straza got into back in mid-February, a trade that Straza really, really liked, pounding the table on Asia. We got into it here, and it was a risk reversal. So a risk reversal is where you sell. In this case, we sold the June 35 puts and used those proceeds to buy the June 65 calls. Combined, we had a 50-cent net credit on that entry. So right out of the gate, we're sitting in positive cash flow in the trade. Not a guaranteed win, but we're sitting in positive cash flow, right? We're 50 cents to the good in our account to get into the trade. Well, shortly after we got in, the thing started ripping. It was looking really good for us. We had a pullback that made me a little bit nervous. That maybe, we went a little too far, too fast. But as you can see, it found its 50-day moving average and bounced beautifully off of it. It traded up above 65. And our plan, as laid out on our blog post, and as we've talked about in the past, our plan was if we got to 65, I was going to take some profits on this trade. I didn't want to close the trade, but I wanted to take some profits. And what we did is we sold half of our calls for 640. And we used those proceeds to completely cover all of our naked short puts. That cost us 15 cents. So all in, we collected, 15 cents, let's just say, let's do about 1 by 2. Let's say, we sold one call for every 2 puts that we covered. So we basically netted 605, right? Because 15 times 2 would be 30. Sorry, 610 would be our net. We collected 610, and we already had 50 cents from day one. So we're sitting on 660 net credit in this trade. And now we can't lose, right? We're already winning. We've already booked profits. The rest of our calls can go to zero. We're still keeping that 660 that we've collected so far. All right. So we're guaranteed winner in this trade now. Love it. We still have half of our calls. They are the 65 calls that are just a little bit in the money now. But if C follows through, I mean, man, next stop can be around 80, 85. This could be a monster winner. Although we are starting to run out of time. These are June options. So if it's going to make that run, it needs to do it quickly, because once we get to June 1st, then I'm going to start more aggressively trailing a stop below some recent support levels. But C Limited trade is working great. All right, so that's it for all the actions this week in the portfolio. Let's review our updated stops. We got a bunch of them here that we're updating in no particular order. Here is FXI. This is a bullish China trade that we put on. JC got a wild hair back in early February that he was thinking that China was due for a broader rally, and FXI is a large cap ETF for Chinese stocks. And the plan was that we were going to be patient. We were going to patiently leg into this trade. And as you can see, these 3 purple circles here, these are where our entries took place. We wanted to buy in 3 tranches if we had the opportunity to. We were buying the January 26 calls. We first bought our first tranche right here for $2. Then we bought our next tranche for $1.75. And then about a month or so later, we had another opportunity to buy again at $1.50 at lower prices. Yes, but this was part of our plan. We wanted to buy in at lower prices. We wanted to get a good average price for our position. Now we've got the full position on, and look at that. I mean, it's almost like we knew exactly what this thing was going to do. Of course we didn't, right? But I mean, almost immediately after getting our last piece on, then FXI really started to rally. Things looking great. Our calls are in the money now, sitting on some nice gains with designs on bigger gains from here. I don't have a profit target on this trade. This is a we're in it to win it type situation, but we are going to trail a stop as the move materializes. And right now we're moving our stop up to 25. You can see right here, which corresponds right below the 200-day moving average. And this 50-period moving average is probably going to rise up to that pretty soon. So 25 is our new stop loss level in FXI. As long as we're above 25, I'm going to keep holding this position. Okay, speaking of China, JD.com. This is a trade we got into a little bit more recently, early last week. We got a September bull call spread. We bought the 30 calls and sold the 40 calls in September options. We paid $280 for that spread. And so far, so good. It's moving our way. As you can see, I am now raising my stop to 28.50, which is right above recent resistance. And we wouldn't want to see this gap get filled and then close below this little pullback. That feels like a nice logical spot for us to place a stop for now. So 28.50 is the stop in JD.com. APH, Amphenol Corporation. I feel like we've been raising our stops every time, almost every week. We got into this back in, let's say January, late January. We bought a July 120 calls. We paid $1.60 for them. Our calls are very much in the money now. We're $7 to the good past our strike price. So we're sitting on a very nice gain here. We haven't done anything to this trade yet. We have not sold anything. We still riding the full position. If we do get the 132, that's where I will take a little off. I'll probably sell half of my position up there to lock in some gains and give me a free ride on the rest. But in the meantime, 118 is our new stop loss level in Amphenol. We don't want to see Amphenol roll back below 118. If it does, I will pull the plug on this trade and move on, hopefully booking some profits. Let me have a sip of coffee here. All right, Google L, right? I've never understood why there's multiple Google stocks that are traded, but this one is the GOOG L, GOOGL. We are in an altered risk reversal. Maybe altered is not the right word. It's protected. Okay, we defined our risk in this trade. So instead of selling a naked put and using those proceeds to buy long calls, instead we sold a put spread, which is defined risk, and use those proceeds to buy a call spread, which is both defined risk and limited upside, because we're long the 180 calls and short the 190 calls. So the most this position could be worth at expiration day is $10. Well, we put the trade on for a 30 cents net credit. So we're already ahead of the game here. The stock is moving our direction, which is wonderful. I am placing our stop now at 160, which corresponds with this recent resistance we had before earnings. This gap here is what resulted from the earnings call that Google most recently had. It faded, which was kind of troubling for 3 days, but it found a bottom right around 162, 163. And I'm hoping that's going to hold. Eventually, I'd like to move my stop up to 163, but for now, the stop is 160. Any close below 160 will get me out of this Google trade. And assuming it's not a big move below 160, we'll likely get out of this trade for a profit. If our stop gets hit at 160, we'll probably get out for a profit. It won't be a big profit, but better than a loss, right? But so far, this trade's looking pretty good. If it gets as far as 190, which is where our short calls are, we will close the trade down, book our profit. It'll be a nice profit at that point. But we got some time before we get there, I think. We already talked about C Limited, but I'm bringing it up again because I didn't mention, we showed the slide before, that we are moving our stop up to 60. All right, so any close below 60, that's a new stop for C Limited. Below 60, we get out, and we're already guaranteed profits in this trade, but we will make it official. We'll finalize that profit if and when we close below 60. All right, next up, we got two more here. Ego, which is El Dorado Gold. We got into this trade mid-March here. We bought the September 15 calls for $1.20. We've had a great run. We had a little bit of a pullback, but right now the stock's trading at 15 bucks, right at our strike price. That's a good thing. Trade's working out really well for us, but we don't want to see Ego come back below this recent pullback. So our stop now is at 14 bucks. If we can't hold 14, I'm going to pull the plug on this gold trade. But so far, so good. I'm liking our chances here. I feel like this is really, this consolidation here can work itself and resolve itself higher. And we will take a little off at 1650 if we get up there. Finally, Wells Fargo. This is a trade. This is one of two trades we've put on recently. Our most recent trade in Wells Fargo got stopped out. We've already talked about that one. But the one we got in back in late January is still on the books and still working great for us. We're long the January 60 calls. We paid $1.75 for. We are in the money in these calls now, which is great. We already sold a third of our position for $6.15. So here's another situation where we're already guaranteed profits. It's not a huge guarantee right now. Let's say I bought 3 calls here. Those 3 calls cost me, what's the math there? $5.50, all in. Well, I just sold one of them for $6.15. So I've already paid myself back all of my original risk capital plus a little extra left over. That's my guaranteed profit. So what's that? 50 cents or so. Not huge. That's not the gain I'm here for, right? But at least we know we can rest comfortably knowing that the worst case scenario here is we walk away with a small win. But in all likelihood, if our stop level gets hit, if we get right now our stop is at 58.50, that's a new stop. If that level gets breached, whatever we can sell those calls for, they'll still have premium. Most likely, we have until January, right? So there's a lot of time to expiration. So if we were to get stopped out at this stop loss level, we'll be able to get something for those calls. And whatever we get, that's pure profit. Again, because we've already locked in some gains here. So we can't lose in this trade, which is a good situation. But boy, if you look at this chart, I mean, it looks like the S&P and the NASDAQ, right? It looks like a stock that's ready to pop. Looks like it's ready to go, lead the market higher. I'm here for it. Let's do it. All right, that's it for our updated stops. I will quickly touch upon new trades that we've put on since we last spoke. I'm not going to go into the full details of these trades. All those details can be found at allstarcharts.com. Head to the members section, head to the options section. You will get full detailed trade plans of why we like the setup, how we're trading it, where our stop loss level is, where we might take profits. All that is laid out in every detail in the trade plan. If you don't have access to that, please send us an email, info@allstarcharts.com, and we'll be glad to hook you up. But here are 4 trades we've got into since we spoke, since our last jam session last Thursday. The first one we got into was Tesla. We've got into a bullish trade in Tesla. It's not working so far, but neither is it hurting us. It's just, we might be a little early, but we got some room. But we're bullish Tesla here. We're bullish in Tesla kind of, the bet we're making is that Tesla made a recent low. We think that low is going to hold at least for a little while. And we think it could catch some bears by surprise. Next up, Rocket Mortgage. We got into a bullish trade here a few days ago. Love this setup. This is a high short interest name. This thing really has some potential. So Rocket Mortgage, again, details on the trade blog. We got it all in there. Next up, ADI. This is Analog Devices. It's a semiconductor name. We love the space. I love this trade as a hedge against some other trades I have on. But we are bullish ADI. That's a new high, new all-time high there that you see circled. You guys know me. I love all-time highs. And finally, don't throw oranges at me, but we put a bullish trade on in the old Trumpster, in the Trump Media and Technology Group, ticker DJT, the meme stock du jour. Hey, this is it's a defined risk YOLO responsibly trade. We are putting a trade on that we think might benefit quite handsomely, perhaps, from November shenanigans or the lead up to the November elections. You know, I'm not making an opinion for or against the orange man behind this stock. I just like the setup. I like the potential. And hey, why not make some money from the shit show that will likely be the 2024 election? All right, guys. Like I said, all those trade plans are on the blog. Head to allstarcharts.com to get all those details. Let me just follow up here. I know some of you guys like this last slide here with all of the updated stops. We already reviewed these, but here, if you want to pause the video and write these down if you need to, these are all the updated stops for now. And here we go. Info at allstarcharts.com. If you have any questions or hit me up on Twitter, I'm Options Sean. Happy to engage with you there. Have a great have a great rest of your weekend or rest of your week and into the weekend. And we'll talk again early next week. Until then, trade them well, everybody.